Hello everyone. I like to highlight two very important things first. First, in the last pre-market video, we discussed in detail about the US credit rating downgrade and its issue. As a consequence of that, on Wednesday, US 10-year Treasury bond yield reached above 4%. Now, yesterday during the Indian market hours, it reached the high of over 4.18%. Basically, in the last October time, US 10-year Treasury bond yield reached the decade high of over 4.25% and then dropped till below 3.3% in April time. Now mainly again in the last 3 days it moved above 4.1% and very close to breaking out the decade high. So here in this situation I'm going to ask you guys a question. If you guys got over 100 million US dollars, then where will you deposit those money? I mean, if you buy or invest in Indian rupee 10-year bond, then you will get the bond yield of 7.19%. If you guys invest in UK pound 10-year bond, then you will get the yield of 4.5%. And as I said earlier, if you guys invest in US 10-year bond, then the yield will be 4.18%. Just for info, in the last 10 years, rupee dropped approximately 45% of its value to dollar, whereas UK pound lost approximately 23% of its current value. So, in this case, where you guys will invest? In rupee, dollar or pound? This is the exact situation where all the portfolio managers, FIIs and to some extent DIs are having. Here, the rational choice for any investor or the portfolio manager will be to invest more than half or majority of the money in the US dollar. Since that itself generates over 4% money returns, the remaining 3% extra that Indian rupee offers will come with the risk of currency devaluation. That's why increasing US 10-year bond yield is always against for all the countries in the world, as this will make the investors to liquidate the money and move it to the risk-free place like 10-year bond. And thus, yesterday, most of the country's stock market had a second consecutive bad day. And the second thing I like to highlight is the surprising announcement by Morgan Stanley during the Indian market hours. For those who don't know, Morgan Stanley is one of the top US investment bank who got the assets under management of over 1 trillion US dollars, and their subsidiary Morgan Stanley Wealth Management got assets under management of over 2 trillion US dollars. And they run all this MSCI index, etc. Basically, they are very influential in financial space, and now they said that they were overweight on Indian stocks more than South Korea and China. Actually, yesterday they downgraded China and they said the premium for Indian market is reasonable for its growth. This statement in the normal day will make the market super bullish, but our Indian market major index didn't respond to this at all and closed yet another day strongly on the negative side. However, both mid-cap and small-cap closed positive. Now, coming to US, this global negativity made all three US major index to open significantly negative, but all three recovered almost all the points. However, the stock-specific muted revenue guidance made sure all three closed negative. I mean, Qualcomm, a semiconductor company, down over 8% and PayPal down over 12%. Here, both of them crashed despite posting good earnings number, but because of not so good future guidance. Above all, in addition, Department of Labor released the number of new people that claimed jobless insurance for the first time during the past week. And the data came as 2,27,000, which is in line with the expectation, but the number of people applying for jobless insurance is reducing for the 8th straight week. So at the end, Dow Jones lost 0.19%, S&P 500 down by 0.25% and Nasdaq decreased by 0.1%. About VIX dropped 1% and moved below 16, which is really good, at least one positive news. In terms of oil, Russia announced that they are going to reduce 3 lakhs barrels per day production, and Saudi Arabia is going to extend their production cut 1 million barrels per day till the end of September. Both made the oil price to increase 2%, and at the time of this video, WTI crude oil is trading near $82 per barrel and Brent crude oil is trading over $85 per barrel. In the US aftermarket hours, Apple released their quarterly results, and as expected, their revenue declined for the third straight quarter due to the less iPhone shipment. Because of that, in the post-market, in the offline, Apple stock price decreased near 3%. However, in case of Amazon, they posted good results and delivered good future guidance. Because of that, their stock price increased over 10% in the post-market trading. Coming to Indian ADRs, all four major ADR stocks closed negative, especially ICICI Bank. In Indian market, it decreased only 1%, whereas in the US market, it dropped over 2%. Similarly, Infosys closed positive of 0.5% in India, but in US closed negative. Same for Reliance Industries. In Indian market, it decreased by 0.4%, whereas in the GDR, it dropped over 0.7%. Moving on, about GIFT Nifty at 3 am Indian Standard Time, it closed near 19,451, which means equating it with our spot market, indicating flat to negative opening today. So that's what happened in the global market. Now let's move to the India related info. First, it's crazy. All of a sudden, now FII for the 6th straight session, they were net sellers. FII net sold the shares worth approximately 320 crore rupees and DII the net bought shares worth approximately near 1730 crore rupees. Then regarding quarterly results, yesterday in the aftermarket hours, various important companies such as Airtel, Zomato, Adani Enterprise, Adani Power and Eicher Motors all released their quarterly results. Here, I don't want to bore you guys by explaining all as each individual. As a summary, all of those mentioned stocks beats the analyst estimation, and for Zomato, for the first time, they posted a profit in the company history. Overall, the Q4 results of major companies that released yesterday showed mostly a positive outlook. Finally, yesterday, S&P Global Rating cuts the Vedanta rating outlook from stable to negative, citing the funding risk. Here, one more thing. Yesterday, Vedanta promoter Twin Star Holding sold over 4% of their stock in the open market. So, I consider both the news negative for that stock. As a summary, again compared to last 2 days, global momentum trying to get back to normal as US market closed marginally negative. So does our ADRs and GIFT Nifty is indicating a flat opening. However, increase in the crude oil is always a risk for India. Then about the things to look out. SBI, M&M, Britannia Industries, Paytm, Aditya Birla Fashion, BHEL and Bharat Dynamics are some of the major Indian companies' earnings results are scheduled to release today. And in terms of macro, during the market hours, around 1:30 p.m., various European countries such as Germany, UK and Italy's construction PMI data are due. Since as I said, most of the time, Western developed nations are more or less housing economy. Then at 2:30 p.m., Europe's retail sales data is due, and in the night, various US jobs related data such as unemployment rate, payroll data, etc. Coming to technical, yesterday Nifty opened a gap down of 70 points, then it reclaims the 19,500. In the second half, it dropped over 200 points and moved below 19,200. However, final hour recovery saved some. That's the reason it forms a medium bearish red candle with the same size upper and lower shadow, and also it forms a lower low and lower high formation for the second consecutive day, which indicates the sentiment is largely negative. However, the buying interest at the 19,300 level suggests some support at that level. So, the 19,300 zone is critical given that Nifty has taken support at this level, and with the increased volumes, there is a possibility of a rebound, especially if this level holds today. This could lead the Nifty to move towards the resistance zones between 19,400 to 19,600. However, if Nifty breaks below 19,300, the next significant support lies at the 50-day exponential moving average 19,160. A breach below this could pave the way for a further downside towards 18,600. On the upside, a strong move past the resistance levels could trigger some short covering and buying, but the overall sentiment remains bearish, suggesting that any upside may be limited and could be met with selling pressure. Then, in terms of Bank Nifty, it forms a long red candle with a short lower and upper shadow. So, despite being overstretched on the downside, the overall sentiment still remains negative. Thus, here 44,500 is crucial. If Bank Nifty can hold this level, a pullback to around 45,000 to 45,200 is possible, aligning with the key hourly moving averages. This recovery, however, might be short-lived given the overall bearish sentiment. If the 44,500 to 44,400 support zone is breached, then there is a strong case for further downside movement, potentially reaching 44,000 in the short term and even lower support levels if the decline continues. Moving on, from pivot chart for Nifty, at present the support is present at around 19,310 and strong support is at 19,160. On the higher side, the immediate resistance to break is at 19,500. Then in terms of Bank Nifty, the support is present at around 44,140 whereas the resistance is at 45,080. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.